On Real Estate for Real Life podcasts, we sit down with standout business leaders to unpack what's actually working.
How they scale, lead teams, win clients, and build businesses that last. We're your hosts. I'm Courtney Gauchman.
And I'm Ryan Wilson. Thanks for tuning in. Most entrepreneurs spend years building a business. Very few know what it actually takes to sell it, and very few know actually what it takes to make it valuable.
Today's guest has built a nationally recognized company, sold it, navigated life after the acquisition, and now helps other business owners value their business and sell it. We're welcoming Matt Naimoli, who is a partner at Legacy Advisors, to the podcast today. Thanks for being here.
Thanks for having me, guys. This has been something I've been looking forward to, so
We're fired up to have you.
Yeah, anytime I get to spend some time with you too.
Oh, feelings mutual.
But if the camera's rolling, it's even better.
Oh,
Way better, right? Because we're going to get some good content here. And we're excited to dive into a conversation with you where we can actually learn a lot more about not just running a business, but how you value a business.
yeah. And I've known you for 15 years, and we go way back through your early days. So let's start there. Tell us what it was like. Okay, you're a baseball player at UVM, University of Vermont, and tell us about how it started there and how that got your career rolling.
I love that you plugged baseball, not me, so I can just be like, "Oh yeah, sure, happy to share."
Yeah. You're a stud player, obviously.
Yeah, obviously, yeah. No, I have a great pleasure to play baseball at University of Vermont. I was a catcher and captain there. And my senior year, I was finally kind of realizing, like, yeah, graduation's coming up soon. I need to kind of get serious. I need to get some real world experience. And I remember when I was young taking some tests about what I should be doing, and it always came back to sales. And I was like, all right, fine, I'll lean into that. So I found a sales internship at a Fortune 100, insurance company that was local to Burlington. And they agreed to give me like $19 an hour, which at the time was,
Wow.
This is back in the 40s. Like,
You're rolling
Yeah.
it.
$19 an hour is like significant, right?
You were rich.
And I convinced the university, and I'm sure it's been long enough since this has happened, I can share this, but I convinced the university to give me credit. So I was getting credits and $19 an hour is a great internship. I step in the office the first day. It was either the first day or the second day. The manager, and I don't know if he either retired, got fired, or quit, but whatever happened, the manager who had hired me left. So I am without a manager in a brand new internship, my first like real world life experience with work. And I didn't know what to do. But I still had the job. So they were paying me. I think I spent most of the time playing baseball. The sales reps coming to my games, like me getting coffee. And so of course I fell in love with insurance because this is a sales insurance, internship. And I'm like, if this is what the real world's all about, I'm in. Sign me up. It was like the best thing that the company could have done to get me into insurance.
Someday I'll make $20 an hour.
Yeah.
You know what I mean?
Or just 19. I'll say it 19. I'm happy with it. And so, I graduated and they offered me a job, like a sales job. And so I took that job and it was actually in Framingham, Massachusetts. So that was how I got into the insurance world. And then, a few years went by just hustling and trying to do my best like you guys do with, driving in as much networking and sales as possible. Realized that I enjoyed sales. I liked the insurance world, but entrepreneurship was really the thing that excited me, and building something yourself was really interesting to me. So that's what sort of founded my first company, which was G&N Insurance.
That's so cool. And that's when we met back in your G&N days, which for the people listening, half of you will know, half of you will not know. G&N was a legendary insurance company in the residential real estate world. It was the best parties, but more importantly, the best providers of insurance in highest level of customer service. Which I truly believe, and I know a lot of the people that used to work there with you. So you built an amazing company. Tell us about how you started that company and why you took that leap into entrepreneurship.
And also why you chose to do residential homeowners insurance, right? Because that was a really specific key piece of G&N. Is that what your internship was too in your original insurance sales? Or were you selling all insurance packages at that time?
Yeah, as an intern, I think I was learning how to fill the toner and get coffee. No,
we could use some help around here.
There was a little bit of personal lines, but no, when we started the company, it was for two reasons. One, we knew we wanted to build something ourselves, right? And two, we thought that offering choice to consumers was going to be like radically new and different, right? Because we came from a captive, Fortune 100 company that we only sold their product. So selling multiple companies was like, whoa, that's a huge offering. This will really work. And we realized quickly, like, that's not that different from all these other agencies out there and other entities. And so I'd say, like, within a year, we kind of sat back and said, what do we want to be? What do we want to be remembered? What do we want when people think of us? Who are we? Why do we matter? And we identified our target client as like our favorite client to work with was that individual who was referred to us by either a realtor, loan officer, attorney in the process of buying their either first house, second house, investor property, and needed that support through that transaction. It was a timestamp, there was a closing, so it was pending time. Someone had to make a decision. They needed what we had to offer instead of us trying to sell them on what we had. And we were able to really kind of create a whole process around helping people move through that really big life decision. So it felt right. Helping, selling the other lines of business as well was an option. But so we really had to take an assessment of what really works for us, what kind of clients do we enjoy, and we want to grow the business around. And identifying home buyers was that client. So starting with that target client and then going upstream to who influences those clients. Loan officers, realtors, attorneys. And so we kind of burned the ships and went all in. Not because it was the best strategy in the world, but because it was something that worked for us a little bit and we knew that we could expand on that. And if you can grow, I feel like growing, it's much more important than finding the absolute ideal target client long term. It's just like what works now and can we expand on it?
Yeah. One of the things you mentioned was the need. Those buyers needed that product. You didn't have to sell them on the product.
Mm-hmm.
So you could do, and this is what I think your company did really well, was you educated them on the options that they had. And then the quote unquote sales part of it was saying, hey, do you want to include auto because we can save you even more money? So you're educating them on everything, and then it's their choice. And ultimately they need to make a decision. If they want to go with you, they can. If they want to go somewhere else, but you guys always had the most competitive rates because you could shop it to 60 carriers, let's say. So I like that a lot. They needed it as a smart business model too.
Yeah. And we went all in. I feel like niches do lead to riches, and like we went all in. It allowed us to define the brand and why we mattered, not just to the customer and the client, but also the referral partners and the network. And I think that allowed us to really, kind of grow vertically. We got up to like 7% of all home sales in Massachusetts were flowing through the agency at one point, which is pretty cool.
Yeah, that's incredible.
And yeah, you're right. We got to, really fun things like, that kind of led into the bobblehead campaign and other things that we did that were related to that.
Cool.
What I love about the fact that you picked a specific niche and you actually went with that is that there's so many people in these industries, right? Like as real estate agents, we could technically try and sell to every single person out there. Everyone can be your client. Same with insurance. Anyone who owns a car, owns a house, right? Like property, like even renter's insurance. There's so many human beings out there that could be your actual client. And I think that a lot of people make the mistake of, well, I don't want to be too siloed. I don't want to exclude people in my audience space. So what they do is they try and speak to everyone and you end up speaking to no one. And I think from a marketing perspective, that's what I've always been so impressed by is how you guys manage to stick to your lane and then put, double down, triple down on all of your marketing campaigns, which we'll get into the bobbleheads because I think it's so brilliant. But it was such a good strategy to not say, we don't not do car insurance or even just personal property insurance, all the other things. But ultimately, it's focus on the one thing that actually is going to be able to make you multiply and continue to get more and more business out of it. And I do love that. How many years ago was that you guys actually put that strategy in place?
We leaned into that like a year, 2 year, maybe a year and a half into the business. So probably 2011.
A really long time, right? And I still to this day work with people that say, oh, I don't want to send an email out to buyers because what if sellers think that I don't work with them? It's like, you have to pick something to talk about that's of value and actually tap into an audience that's interested in what you're talking about. And I think that people's fears of giving value and focusing really aggressively on one topic is what's holding them back from being able to actually grow and scale.
Couldn't agree more. I think sometimes there's a short term downside because if you sort of silo in on what that's the one thing you're going to do, you can alienate those prospects that are outside of that target. But that allows you to grow so much faster in that vertical. And I think long term, it's such a more scalable. Plus nowadays, it's just there's so much noise. So
Yeah.
being able to resonate with the target group that you want is like, it's pretty essential.
Yeah, but also it's everything you do. You now say, does it stick in this category, right? Does it stick to that category? Your marketing efforts are going to be so much more understood and noticed if you're actually continuing to stick to that exact audience, right? So tell us about how the bobbleheads and your entire marketing campaign came to be.
Yeah, I think it was inspired by Dwight Schrute.
Oh.
My former business partner, Zach, and I think it might have been his wife that was probably the original inspiration. But we were looking to do something custom and unique to thank all of our partners for making referrals and introductions. And so I think it was around the time when The Office was just booming, and it was just hilarious. And we
It
both
still is
loved it.
booming in my
Still is
house.
booming, yeah.
Gotta be honest, watch it all the time.
And so yeah, we were given little miniature bobbleheads of ourselves like a year into business as like kind of a congratulations, you haven't taken a dime and you're still survived and grown the business. And we had it on our desks for a little while, and every time somebody came in, they'd either be like weirded out or super complimentary, but either way it would be something they would focus in on. And so I think it was our very first like dollars spent on marketing. And we said, you know what, let's just go all in. And we've already identified this is our target, group, realtors, loan officers, attorneys that are top performers within the Massachusetts or New England space. We looked them all up, probably about 100 or so. We bought 100 bobbleheads from online company and had all of them made into their individual referral partners, and then either dropped them off in person or hand delivered, or mailed them out with a little note about what it meant to be part of the bobblehead community, and it caught on. And fast forward 8 years, we made 1,200 bobbleheads and of all the top realtors, attorneys, and loan officers in the state. And it kind of spawned other things. We spoke. Eventually, insurance agencies caught on to what we were doing, and groups and associations started asking us, "Hey, would you mind spending some time, speaking at different conferences?" And so we started, getting out of just the real estate space and spoke about what we were doing from a marketing place, as well as for, what was working organizationally for the business. And eventually, we spoke on stage at a few national conferences about the bobbleheads. And all of a sudden, we had all these insurance agents starting to reach out, be like, "Can we hire you to help us, and consult with us?" And we were like, "All right, well." We started a consulting business eventually called Bobble On, because clearly that was like a catchy, kind of trendy name for us. And we started a podcast series and a video series to sort of highlight what we were doing and the growth we were having, at the insurance agency, but also leverage that as a marketing, opportunity for the consulting business. And we had a blast. We spoke down in Miami at Gary V's, conference down in Miami. We had Ryan Serhant on one of our episodes for the vlog, and we just had a ton of fun, like creating and being, being silly almost, but professional and silly at the same time in the real estate community, locally, but also with insurance agencies and helping them as well. And it just sort of, I can't get away from bobbleheads.
Right.
Yeah.
Even today, fast forward, 15 years from when we started, the firm that I have that we support insurance agencies when they're looking to sell their business. All our former clients, I make them into bobbleheads, and they get a bobblehead, a branded speaker, a little video brochure as a thank you, because it just works.
Yeah.
I mean,
Right.
people, who doesn't love to see themselves as like a token of appreciation and gratitude for something special. It's unique, it's custom.
Well, you hit the nail on the head when you said it was a conversation starter, right? So people either thought it was creepy or they thought it was really cool. What it is it triggers conversation around it. And we always say, like, we give a lot of gifts in our industry as well too. And I love picking entertainment pieces, right? So I like, for us, we're not doing bobbleheads of our clients, right? When they buy a house, we're doing more entertainment pieces. I like serveware, right? Because we think of it from the standpoint of it's a conversation starter. If you're having guests over and you pull out this like gorgeous piece for like chip and dip or charcuterie or whatever it might be, it's like, it's going to get a conversation started of like, oh, where'd you get that? And it's like, oh, my realtor gave that to me. You guys picked something that was so creative that people would take pictures of. They'd post it online. You got people to spread your brand and your name like wildfire, especially locally, because of course that's how we know you is locally. But then you became really recognized within your actual industry in front of other industry leaders too, because of the fact that also most people that are phenomenal at sales don't have that marketing acumen. And you guys also had that marketing piece. You guys were so good at nailing down your demographic, who that target audience was, and then creating ways to make that, you're giving them recognition, and then also make it something that was really creative and stood out. And I think that that's what made your business such an incredible like model for all of us in the industry too, right? Obviously different industries, but same realm, to say like, oh, how can we kind of learn from you too? Which is the whole premise of our podcast, is to learn from other business owners that do something a little different. So why don't we get into the EOS stuff too? Because you weren't just a brilliant marketer. You also had some unbelievable operational processes too. Do you want to talk a little bit about that and kind of what EOS meant to you guys and your growth?
It started from a place of pain, where my former partner, Zach, and I were, this is probably 2015 or so. And we were growing the business, top line was increasing, we were achieving the goals that we had set forth in terms of production and whatnot. But we were kind of doing a lot. We were wearing a lot of hats, and we were growing with employee count, but it was a little chaotic. There wasn't really like you woke up every morning and you weren't really quite sure what was going to hit you, but you knew you were going to get hit. Mm-hmm. And that was kind of like a rinse and repeat daily thing. And I was up till like 2 or 3 in the morning sending out emails, and Zach would wake up at 3 in the morning and he would be replying, and we'd be like, there's got to be a better way.
Right. Not sustainable.
Not sustainable.
Yeah.
Is a great way to put it. And so we started asking other people in other industries what they did to solve this problem of growth and being in control of the chaos. And we were referred to a number of different consultants. Eventually, we landed on someone who was an implementer for EOS, which is an entrepreneurial operating system. And it really spoke to us. I mean, the organizational health of the EOS model is really the kind of the through line and the spinal cord of the operating system. And for us, it allowed us to sort of manage the business in a way that gave us a kind of, it's tried and true, and it gave us a really like sequential kind of process for it, from org charts to core values to weekly meetings to process design and accountability and KPIs and leadership, all the things that you need to grow a business from infancy to the next level, help you break through those ceilings. EOS was that for us.
So when it comes down to creating a value for a business, right? Like, we know how to run a business, we know how to scale a business at this point. We've proven that to ourselves. But now you run Legacy Advisors, right? You're a partner with Legacy Advisors, and you're helping other businesses figure out what the value is and then be able to actually sell their business. How do you, obviously marketing matters, sales matters, and those operational processes. But when it comes down to it, how do you really truly figure out the value of a business?
Good
I'm
question.
sure it's not like an easy, simple.
It's easy. You have one sentence.
7 words.
Yeah.
Yes.
7 words or less. First off, I would say that any business that is running on any operating system that has a way that they run the business, that the leadership can stand up above the business and plan and set goals and figure out what's coming. What are we going to do this quarter? What are you going to achieve next quarter? How does that lead into our annual? How does that lead into our 3-year? How does that lead in towards our 10-year vision, right? Anyone that can run that way is going to break through ceilings, are going to become more efficient, more profitable, going to grow faster with less dependency on the principal and the owners. And that is a more valuable business to anyone in any industry. I would say that when we are looking at, we only help insurance agencies sell their business. That's our specific niche. Talk about niches. Yep. Mm-hmm. And when we're initially having conversations, yes, most people want to start with, what is my business worth? I've been building this for 20, 30 years or 4 generations. This is a huge decision. I want to make sure I get it right. I don't want to feel pressured. I want to just get information. I want to be educated first. Tell me about, what would that entail? And so it starts with conversations and education first on how businesses are valued. And then we gather all their financials. We build a financial model. We figure out what adjustments would come out of that model if they were going to be, part of a larger organization down the road. And then we present that valuation to them, what it would look like up front in guaranteed cash and equity. What deal structure components could look like in terms of earnouts and potential equity appreciation, what salary and commissions could look like. Give them the full sort of scope, and then it's that's all education for them, just knowledge and awareness, empowering them. Because I feel like everyone needs to feel like they're in control when they're making one of life's biggest decisions. And then if at that time it made sense to work formally together, they would hire us and we would take them to market.
It's incredible.
That is incredible. So when you sell, though, this is the interesting piece. We had someone on who also talked about acquisitions. And one of the interesting things that we talked about is how many businesses, large companies, acquire this incredible company that was running really well, had these amazing systems, right? And was operating at a high level. Then they make them immediately switch to their operating systems, right? How often does a company actually come in, buy it, and use what they already had built versus have them come in and actually edit their systems to be what the bigger company is using?
That's a great question. Most of the times, larger, more established companies that are acquiring and are highly acquisitive, they're going to eventually migrate and integrate whatever they're buying into their own tech stack and their own platforms, right? They have to.
You kind of have to, yeah.
I would say that if there are groups that are looking for minority investments, or they are looking to get in early on with a platform and build around that platform, those are the opportunities for the sellers to really maintain a lot of autonomy around what they do, how they do it. That's not as common, right? And if you're in an industry like insurance or whatever, it's highly acquisitive. There's a lot of private equity money in it. You're going to typically have, call it 15 to 50 of really, really strong, large aggregated businesses that are acquiring agencies and eventually going to migrate. Now, when we're working with clients, one of the biggest things for them is what's day two going to look like. It was for me, and it should be. That's most groups aren't looking to buy the business and fire the main owner or principal, and that main owner or principal may want to continue on for 3, 5, 10 years. So what does it look like when I wake up in day two? It matters. So a lot of time that we spend is, here are the different groups that are out there. This is what day two would look like with this group, and this group. Which ones do we even want to, which ones should we avoid even talking to? Because you're not going to be happy in day two. I think that's one of the differentiators that we sort of lean into because of our background and experience of having multiple partners who sold.
And how long? I know your business, similar to us, like you're only getting paid if the deal closes. So you're advising and you're consulting them, and then when it closes, whatever that structure looks like, that's what it is. How long is that sales process? So when you meet that insurance agency owner and they say, hey, I'm looking to potentially sell, and you take them through that process, how long is that sales process typically? Months, years?
If someone has high intent and they're organized, their finances are organized, it probably takes between 5 and 6 months. A lot of times we'll do a valuation for someone, and either we won't be at their number, like they won't be valued at what they need to be valued at to sell the business, or we realize their margins compressed and we need to make a lot of operational changes, or they need to make operational changes in order to grow into the expense loads that they might already have in order to achieve maximum value. And we recommend do these 3 things, come back to us in a year, we'll reevaluate and update the model and see if you're ready. So sometimes it can take 12 months, 24 months. We had a client we valued in 2023 that just sold with us now 3 years later.
Oh, wow.
So it really depends. And I would say if you have high intent, you're organized, your margins are there, then 5 to 6 months.
Okay.
But it's very, very similar to real estate.
I was just going to say that's exactly like listing a house, right? So it's very similar. It's one of those things where it's like, if you want to get maximum value, and it depends on every seller's pain point, and I'm sure it's the same for you too when you're talking to a business owner. It's ultimately, what do you need? Do you need to sell your home right away? And you're willing to not do the updates that you need to do to get maximum value, right? Like, it's like, we can do that. We can go to market like that. Or do we take the time to make sure that the house is exactly kind of turnkey, and we put a little extra money in up front, right? Get it to that place of it looking perfect. And then from there, you're able to actually get the maximum value. And I think it all depends on, like you said too, the owner's preference, what they need.
Yeah, goals, timelines, and everything. But there's so many similarities. I mean, between, if you're selling a luxury home, for example, someone wants to get maximum value out of it, right? You start with a market analysis, right? I mean, maybe there's those repeat clients that come back to you and say, hey, Ryan and team, I love what you guys did for me. That's 3 last homes that you've helped me buy and sell. Can you do this one? But most of the time, you'll start with a valuation or a market analysis of the property value. Same thing we do.
Yep.
And then once they say, hey, we love you guys, we're confident in you, let's go forward, you're going to build their marketing materials. You're going to take that house to market. The same thing we do. We build a full deck and all the narrative and the things that make them unique and special outside of the financials. And then you curate a buyer list like we do, or you bring buyers to the table. You create that competitive environment in a short time frame, and then you help them negotiate based on what, who's coming to the table and the strength of the offers. Same thing. We'll get the offers. We'll help them figure out the merits of every one of them and dissect them, and then identify which one makes the most sense. The only difference is that, and then there's a diligence process, right? There's a diligence after they say, yes, I want to move forward. They sign the APA or they sign, the purchase agreement or whatever it is. Then there's a diligence process, a legal process, whatnot. But the only difference is when someone sells their business, typically they're still going to stay in that business, right? And when you sell your house, you generally don't live with the new owner, right? Like you move on and you buy a new house. And I think that's the only major difference really in the sales journey.
So back when you sold G&N, right? And now you're representing people who sell. How much of that, doing your own sale of your own company with your partner, Zach, at the time, how much of that experience led you into, starting this company?
It was the impetus. It was the driver for what we do and why this company exists. It was, for me.
And did you know when you were selling, okay, this is what I want to do next?
No clue. No. I learned a lot through the sales experience, right? It was a lot very emotional process. Psychologically, it was demanding and challenging. Physically, just the amount of labor lift associated with that time of trying to go through diligence and the whole process. And financially, it's a major decision. It's a big decision. So it was very weighty. And we got a great outcome from a financial perspective. And I still love the investment bankers that we had hired to help us because they helped us accomplish our goals. The process, though, if they had been in my seat originally, would have looked different. From the communication strategy, from the attention to detail, the follow through, the questions that we would have been advised to ask potential buyers, just the group of buyers we would have brought to the table at the beginning would have looked a lot different, right? And so what drives a lot of our process now is my experience going through the sales journey, and what I love that we did and we did right, and all the things I wish we had done differently. Even if it comes down to little things like prepping our sellers with what questions to ask in the management meetings and what questions they're going to be asked, and which groups we should avoid even going to because they wouldn't be happy, and even if they got a great offer, we don't want them to be tantalized by that, right? And we want to, and so I think it speaks to a lot of it's also resonating with the market. I think insurance agency owners, for the most part, they built these businesses on their back, or they're second, third generations. There's a lot of emotional connection to it. It's important for them to know that they're making all the right decisions when it matters most. And so we take that responsibility to heart, and we make sure that at the end they can look back with no regret.
Right.
They can look back and say, we crossed all the T's, dotted all the I's. We looked at every potential option. We chose the right fit for the right reasons, and we feel good about it. Maybe not perfect, because you're selling your business. Don't make all the decisions you used to make, but it's the best possible option and outcome that they could have had.
No deal is perfect, but I love what you're saying, because what inspired you basically to start Legacy Advisors is that it sounds like there was a gap in the education in that process, right? Which I love hearing that, because that's what we do as agents too, right? So there are people that maybe they've bought and sold a home, but it hasn't been for 10 years, 20 years, or 30 years, right? They're a little rusty. The market's different. And for us, the biggest differentiator is we have to educate them through the process. What's the market like today? What are your options? Laying the options out on the table, and then really truly holding their hand and educating them through what each option entails and what it means for them, what it looks like in their world, and then what the outcome could look like. And it sounds like you had a great experience with selling your business, but you knew that it was missing a layer. And you being such an entrepreneur, you were like, okay, let's make this into a business, right?
Well, 85% of our team come from, the finance, banking backgrounds, accounting, auditing, CPAs, right? But, layering in some actual real ownership experience and of starting, growing, selling, all the fears associated with that, I think really is a huge differentiator. But I think what you guys do so well, and what we try to do with the education piece, is it requires patience. And a lot of people in selling anything, right, they're trying to rush to the transaction because that's when everyone gets paid. And education and empowerment requires patience, but it also exudes this kind of strength. And clients feel that. They want to be with people who aren't rushing them. They want to be with people who are empowering and educating them. And you guys do a phenomenal job at that. And it's why you continue to grow so well.
I would argue the transaction itself is 1,000 times better when you actually took that time. So while it comes across like patience in the beginning, I think what it does is it avoids so many questions and concerns and emotions later, right? You mentioned how emotional it was to sell your business, how emotional it is for every insurance agency out there that's selling their business. It's the same thing for homes, right? It's super emotional. It's where they're either going to be making memories and building, their lives, or they're selling this home that they made memories in and had a life in. And I think that that's the biggest piece, is the minute that you can over-explain and really highly educate to people, the less surprises and the less emotional it becomes. And I think it's a way a lot of people say, like, we do a good job of helping to make it less stressful. And it's like, because they were highly prepared, right? They were highly prepared for what was going to happen, and they were walked through the whole entire thing. And it sounds like that was the biggest piece that your industry really needs, right? Because like you said, you're selling to people that are legacy insurance agencies, right? That's a lot of pressure. It's a lot of pressure to be like, my grandfather or my great grandfather who started this business, I'm going to sell it now, right? Leave behind this legacy of, my family's last name and all that stuff. And you just need someone who's going to be patient and walk you through it. But I do think, as much as we look like heroes up front, being like, we're patient in the beginning, the reality is it makes the entire transaction so much easier. Like, why wouldn't you do that? Why wouldn't you get ahead and make people feel that much more confident and comfortable with what's going to happen next?
Yeah. Well, it takes a lot of mess ups too to figure it out, and like identify what process can be consistently repeated and followed that generates the best outcomes. And that takes time. It takes a lot of kind of, stubbing your toe. But yeah, getting people completely comfortable and empowered and educated, knowledgeable of what's to come. So setting that expectation and then following through with a communication strategy. Sounds simple, but it can be challenging, especially when you're juggling a lot of clients at the same time.
What is one thing, so for each seller/owner, what is one thing that they mostly misunderstand? Or that is most misunderstood about the selling process?
That's a great question. I would say that a lot of buyers, whether it's insurance or out of the industry, a lot of buyers want to go direct to the seller because they can put a compelling multiple of EBITDA or revenue, whatever that industry values the business on, can put a compelling multiple without really diving into the margin. And so for insurance agencies, almost all of them are going to be trading on a multiple of EBITDA or a multiple of profit. And so one thing that we really spend a lot of time on up front is, what are all the adjustments that we can pull out of this business that aren't going to be part of the go forward pro forma to expand that pro forma margin, because that ultimately is going to be applied a factor or a multiple to. And I think a lot of sellers don't realize that they might be operating at a 20% margin, but they should sell their business at a 40% margin. And that makes them so much more than getting 10 times EBITDA versus 9 times. And I think that understanding that is a big aha for a lot of people. Alternatively, the process of meeting buyers and actually identifying which ones would be the right fit for them, it requires a lot of time and effort. And I think people, sometimes they just want to go to the more familiar route of like, who do I know? Who's in my local area? That doesn't generate the best financial outcome. It certainly doesn't generate the best day 2 culture fit.
So speaking about culture, how do you factor in culture when you're talking about, whether you're talking about revenue or EBITDA or whatever, and you play into that? How do you factor and put find the right 2 people to meet to then have a successful transaction? Because culture, personality, all of that makes a big difference. But how do you factor that into the numbers, which I'm assuming the investment bankers that you're working with on the other side, I have to assume they're more data-driven, whereas with your experience, you factor in culture probably a little bit more. How does that play into it?
It's a great question. Yeah. So the other benefit of being niche-y and only being in insurance is we have a really good understanding of the 65 to 70 highly acquisitive, PE-backed, publicly traded, and large, independently owned agencies that are buying routinely. They're driving the market. Understanding what they look like, who they are, the geography they're looking for, the type of business mix that they want, the type of leadership go forward plan, the integration strategy they have, the different tech stack they offer, like all the things that each one of these groups offer, that drives what life is going to look like after you transact, right? So one group that's publicly traded, that's super large, they might take a business and say, all right, well, we have all these roles. We don't need you, and you. right? We have all of the things already determined. Like, you guys are going to change everything you do to what we do, and this is the way we're going to do it. And that might be okay for certain sellers. Most sellers, they don't want that, right? And so they might want a group that's maybe an earlier inning in terms of their journey and growth. They value what you do, as a seller. Yes, they're going to acquire the business, but maybe they'll allow you to keep your brand, allow you to keep your process. Absolutely don't let anybody go, because we're desperate for really good talent. And the things that you do from a marketing perspective and sales perspective, we want to learn from that, right? So that's a different culture.
Right.
What's it going to look like to work with that group versus this group? And who am I going to be working with on a daily basis, right? What systems do I need to integrate day one? What systems can we wait until 365 days later? So all those questions that uncover those answers are what we arm our clients with when they're going through management meetings and they're meeting buyers for the first time. Right? Asking those questions are important. Someone might say, "Oh yeah, we have that role already tied up. You won't need them moving forward." That could be a quick no. Like, absolutely no. We don't want to work with that group.
Right.
Yeah.
That's good.
So it's a hard launch versus a soft launch, right?
Yeah.
Like, as the Gen Z population would say.
Yes.
You know what though? So you mentioned something, you've mentioned it twice now, and this was something I wanted to dig a little bit deeper on. In terms of how you prep your clients to be able to have that larger profit margin, to then be able to value their business at a more, realistic rate for them, but also higher rate, right? There must be so many companies that have some operational expenses that are kind of unnecessary, right? Because like, we look at our P&L all the time and we sit there and we say, what's unnecessary? What really isn't, driving towards our bottom goal, like our bottom line. And our bottom line is always to provide our clients, past clients, current clients, with the most top level customer service, right? So for us, that's where we spend all of our money. Are there areas where we could be cutting? And is that something you guys do before you go to market? Do you actually like fine tooth comb, go through all of their expenses and say, let's cut these for a period of time, so then it shows up a little bit bigger in terms of your profit margin?
So it's a great exercise. Going through evaluation is a great exercise to go through, even if you're 10 years out from selling or never selling.
Mm-hmm.
Because what it does is it forces you to have an audit. It forces you to have a forensic view, analysis of what you're spending money on and why. And so, yes, as part of the evaluation, we gather all their financials, including their general ledger, which gives transactional level detail. And we go through every single item, sometimes 5,000 to 6,000 rows of
Mm-hmm.
expenses.
Wow.
And identifying the one-time expenses that wouldn't be going forward. So a lot of business owners run personal expenses through their business, based on IRS guidelines. But they're obviously not going to want to do that if they're going to get a multiple of the profit. So pulling that out, any marketing spend that they've spent that hasn't worked, right? Either one-time projects or donations that they want to continue maybe personally but shouldn't be running through the business. There's a ton of discretionary stuff that people are running through their business, and software licenses and monthly expenses that they signed up for 3 years ago they completely forgot about.
Yeah.
It's so common to go through one of those exercises and people are like, oh my God, I forgot that I was paying for that ad, that whatever, Google ads on a monthly basis. So yes, going through at that transactional level detail allows us to empower them with what expenses would come out. Now, they don't have to make any changes. These are all hypothetical, like modeling. We model all that out. We show them like, this is how much more valuable your business is because of this exercise.
Mm-hmm.
And if you did sell your business, you would want to pull all this out and no longer spend money here, here, and here.
That would be one of my favorite exercises.
Yeah, you would love that.
Yeah.
What quick question for you? As people are evaluating, all this stuff and going through the months of going through the P&Ls and ledgers and all that, doing their due diligence, what's like an interesting story you have of what has been found during the diligence period where you're like, okay, that's not a good fit, or that's interesting, let's dive deep into that? What are some things that people are finding?
Yeah, no, I mean, in terms of like what we see in a general ledger, there's some really clean financials, and a lot that's fun because it's an easier lift and not as many skeletons per se. But yeah, there's been people who have run race car fuel through their business and diamonds, purchased diamonds.
Wow.
Apartments in Miami. I mean, there's all kinds of things you'll see. We say up front, we're not the IRS. I don't judge anyone, but you absolutely should not be doing this. and if someone was going to buy your business, you should definitely be aware that this has to come out, whether you want it or not. Like, it has to come out. I don't know if that answers your question.
No, it does. That's interesting. I always
Yeah.
just think, especially if you're taking months evaluating and looking into a business, what people will find.
Every business is super unique, even in the same industry. Like not one agency, we've helped 49 agencies sell in the last 3 years,
Wow.
and not one looked the same. I mean, they all look different. From geography, book of business makeup, financials, the legal corporate structure, and all those different, those nuances really do affect what diligence looks like, and the legal process, and the financial diligence process. And that's what makes it fun and dynamic and interesting. It's like it's a brand new house. No house looks the same, right?
Mhm.
No, especially when you're looking in the luxury market, like no house looks the same. Every deal is going to look a little different. Every buyer and seller looks a little different. That's what makes it a lot of fun. But it's fulfilling in the same way as real estate is, because it's such a huge decision. There's a lot of emotions tied up into it. There's a lot of memories, not just yours, but sometimes your extended family's memories. And so it's a big responsibility, and that weight of responsibility creates a lot of fulfillment when everything is said and done.
Yeah. I mean, there's also the whole aspect of their employees, right? The people that work for them. There's so many people's livelihoods at stake. So it sounds like such an incredible, piece of the puzzle that you're a part of, getting to see them sell and find a new path for their long-term vision. But 49 is a lot in 3 years, right?
Yeah.
Is this okay, so put it in perspective for us, real estate market, 2021 was a huge boom for everyone in real estate. Is this a specific huge boom in people selling insurance agencies and large companies acquiring, or is that kind of the standard in your industry?
It's always been a good market.
Okay.
I'd say 10 or 15 years ago, private equity got involved because they saw the reoccurring revenue in insurance, and they were like, that's really attractive, that 90% of your revenue from last year can pretty much be predicted this year. Maybe some premium lift plus some new business, and you're growing. So I think that private equity getting into the industry really drove the values significantly, which has created a huge market.
Yeah.
It has been very, very aggressive the last 6 or 7 years. Interest rates going up a few years back definitely changed the dynamic, and this multiple arbitrage that everyone was playing is kind of no longer an option. Cost of capital is much higher now. There's this tailwind of per se the last 4 or 5 years of increasing insurance across the country in premiums, and that had kind of created this artificial growth, organic growth that really wasn't there. And so now you're seeing a little bit of that depressed alongside higher interest rates. And so long-winded way of saying it's an aggressive market. There's definitely a lot of buyers and sellers. But yeah, we've been very fortunate to support a lot of groups in a short period of time.
It's impressive.
Awesome.
It's impressive. I mean, going from building G&N Insurance, I mean, we've known each other for 15 years, as we said, and you've been an entrepreneur that I've looked up to, and many, many people in this area and nationally have looked up to as one of the top entrepreneurs in the area. What would you say is one thing that you as an entrepreneur is the most important thing, or the other side of the coin, what's the biggest mistakes that entrepreneurs make?
For me, I think it's easier to say this now, right? But working on worthy challenges with really great people is super important to me moving forward. And I think that when you're younger and you're starting your first business or whatnot, sometimes you don't have that opportunity, that lens, that perspective to make decisions in line with that. But the more that you can kind of focus on is the challenge that we're trying to overcome worthy of my time? Am I really going to want to wake up and run through walls for this? And am I surrounding myself with partners or team members that are like-minded, that really look at this problem as a worthy challenge for them, and you want to work together to accomplish it? I think those are the two things for me as an entrepreneur that really makes entrepreneurship so fun.
Right.
It's is this challenge worthy, and am I surrounding myself with some freaking amazing rock stars that I want to go to work with and go to battle with? And I think that most entrepreneurs can answer those two questions with some certainty. You're on the right track.
Well, that's brilliant. Yeah, work with people you love for a worthy goal, which is awesome. So,
Yeah.
Matt, it's been incredible having you on.
It's good advice.
It's great advice. Great advice.
Yeah, thanks for having me.
And we've learned a lot from you. I can't wait to ask you more questions off this podcast, because I could talk about this all day. I think that this topic is so exciting, whether you plan to sell or not plan to sell. I think understanding the value of your business, if you're an entrepreneur and you're running something that's really incredible, to your point, if you are putting in all of this time, energy, blood, sweat, and tears, you need to know that your business is actually valuable, right? That you can run it and it's not going to just completely collapse if, God forbid, you took a vacation or something happened and you needed some time off, right? So I think that, like you said, it's a good exercise to go through for any entrepreneur. And if you are thinking about selling your business in insurance only, reach out to Matt, but maybe someday you'll switch gears and do more than just insurance companies, right?
Maybe, but probably not.
Probably.
No,
All right, maybe we can convince
Thanks
you.
for having me.
Yeah, man,
Thanks
it's been
for being on.
great.
Yeah.
Legacy Advisors. We'll put in the comments how we can get in touch with you and how people can find you. So it's been a pleasure, man. Thanks
Yeah,
so much.
Thanks for having me. You guys are the best.
Right
Thank
back at
you.
you.